Is the global economy on the brink of another seismic shift? Today, we delve into a stimulating conversation between Jesse Day, renowned economist, and Mark Faber, the legendary investor known for his contrarian insights. In a world where commodities play an increasingly pivotal role, Faber and Day's dialogue sheds light on what could be the next big thing in the investment landscape. Faber, a self-proclaimed bear, is apprehensive about US equities. He points to an overvaluation that's particularly evident in the tech sector, dubbing the leading companies as the Magnificent Seven. He notes that the market peaked around the turn of 2024, and since then, it's been a downhill ride. While he doesn't rule out a short-term rebound, he cautions of long-term underperformance and advocates for a diversifying move into undervalued emerging markets and European stocks. And then there's gold. The glittering metal, Faber argues, is a vital hedge against central bank policies and inflation. He emphasizes the disconnect between gold prices and underperforming mining stocks, predicting a future alignment as institutional investors increase allocations. With mainstream investors largely neglecting gold, Faber suggests a portfolio exposure ranging from 5 to 30%. Turning his gaze to the oil and energy sector, Faber sees a bullish future. Geopolitical risks, such as potential US or Israeli strikes on Iran, could act as catalysts for price spikes. However, he acknowledges the sector's susceptibility to short-term volatility, citing recession fears and OPEC+ production hikes. On the geopolitical front, Faber voices concern over Europe's democratic erosion, the ongoing Ukraine war, and the potential for military conscription. He warns of civil unrest and a possible shift towards authoritarian regimes. He also speculates on European conscription drives and false flag operations to justify escalating conflicts. Faber's views on monetary policy and investment strategy are equally thought-provoking. He foresees continued money printing to cover deficits, leading to currency devaluation. His advice: avoid cash and bonds due to inflation and prioritize tangible assets such as gold and commodities. Commercial real estate and overvalued tech stocks, he warns, are traps to be wary of. In conclusion, Faber's gloom boom and doom report emphasizes preparedness for systemic risks. His key advice is to diversify into physical gold, undervalued global equities, and commodities while avoiding reliance on fiat currencies and overhyped US tech stocks. In an ever-changing world of investments, such insights could be the difference between success and failure. And as always, the key is to stay informed, stay vigilant, and stay ahead of the curve.